Welcome back to Java. It's November 13th, 2025. It's also Thursday. There is a lot to cover in this episode, including the main headline you're going to see everywhere this morning. The United States government is open, at least until January 30th, and then we'll probably be going through another similar battle as the debt ceiling comes into play again. I'll be talking about SMR, small modular reactors for nuclear. So let's get started with what's going on in the markets. Fear greed meter, 35 this morning. So it's come up a bit, a little bit more greed in the markets, more retailers stepping in. We're watching the 10-year yield as always. Now, this morning, not a lot of movement, but what we're watching is these yields are getting quite tight. So above 4% at the moment, 4.081. We've got relative dollar strength staying up at 99.24. So that's kind of a good hold here. Cryptocurrency has come back up to 103, 120. Now it keeps hitting the support line, meaning that it could still break down below it into the mid-high 90s. Doesn't have to, though. This could be it. We'll see what happens forward. So with cryptocurrency, money flowing into that, the stock market looking a little bit weak this morning. Yesterday was good rally. Dow hit all-time high. Again, volatility is up, but the Nasdaq was down. So a little bit of a surprise there. The artificial intelligence is kind of playing out to a little bit of weakness. Now, going forward, the futures are saying there's more weakness, and we've got gold as the safe haven as well as silver up. Silver's at 54. Could be eyeing 58 prior to the year end in just a few weeks. So gold above 4,200. As a matter of fact, on this, the daily driver, government news, we're not getting any data and some are selling off. We've got 33 trading days left to the end of the year. So that's not very much. We're watching precious metals actually coming out to be the trade of the year, even with all of the AI that they're saying. So with this government shutdown, there were a couple of things that came to light. The first is with their Medicare plan. So this is specific to the United States, but it kind of underpins different versions could happen in other areas of the West. So they have extended this to January. And in short, what they're doing is this is going to be an artificial intelligence or remote health as they move more toward that and try to cut back on expenses because that is a massive deficit for the United States budget. We've also got someone else that has been kind of a drain on the United States budget as they need to increase and continue the debt, and that's Ukraine. So saying they need more money in order to keep the war going under control. I believe they need their own stock ticker, and then if Pelosi would trade that, they could do quite well. So, with all of this, we've got them saying, look at the market, how wonderful it is that the economy is fine. And they're two entirely different things. So, I just want to bring this up because while the market is up excessively, it is because there's not many other places to put money to get a return. So that's what investors are doing. But this could come back down very rapidly as well. But the narrative is to look at the stock market, and that is the underlying reason for the economy. Now, that said, the Fed may not cut this December, and I'll talk about why in a moment. We've got Treasury Secretary Bessent saying that tenfold growth in stablecoins will lift the demand for treasuries. So they've tokenized treasuries, trying to sell them. However, this could have some other unintended consequences. Calendar. This is Friday. All of the information we're not going to be getting. Instead, we'll just be getting a couple of Fed presidents talking again. No PPI reports. In fact, we'll not get October reports for the labor. This is going to skew the next time we do get reports. They're manipulated anyway, but there won't be a viable comparison. So Fed's Bostic saying inflation is still the clear and urgent risk. So, in short, what that translates to is no easy money, so no rate cuts in December is what he's voting for. So, that could be a little bit of the weakness in the markets that we're seeing this morning, aside from some of these earnings, Disney week earnings. So, that's part of what we're getting some of these individuals. Cisco is up. They're back to their dot-com high on artificial intelligence, of course, and center build-outs. Baba, now this Chinese ADR, they put out a chat rivaling Qwen. So Qwen is what it's called to rival ChatGPT. This also will bring up companies Tencent and ByteDance as well. So as I was saying, warnings from a mouse. This is Disney. They reported their earnings. Trouble in the motion picture sector. That's discretionary spending. So the real economy is no longer spending discretionary spending, or at least it's down significantly. So these are all warning problems with this. Now, problem with going a little too far, a little too early is Michael Burry of the Big Short fame. He has delisted his hedge fund company called Zion. So talking about shorting this market, but a little too early. It doesn't have to go the way that you think that it should, even though all of the indicators and there's not much behind it. So in short, she is, and not to play a pun there, but Stephanie from Wolf Research chief economist, bringing her up because I'm not sure exactly where they got her from, but she is coming out saying that the 3 billion is not a big deal. The fallout from the shutdown is not going to be felt, and that in short, going forward, everything is wonderful, and we're just going to continue, even though there are all of these cracks underneath. So that is the counter opinion, just to bring you both sides, that there are those that believe that the stock market is the driver and it's going along very well. I don't agree with her, by the way. Too many cracks, too many things going on. Now, this is all going to be used to the shift forward, of course, to the cryptocurrencies and to digital currencies, but I'll talk about that in a moment. Right now, the power in the economy, I want to shift to that. Going forward, I think power is going to lead to growth, or as it is right now for Tennessee, losing $2.6 billion mega factory. And a lot of this is because the energy is not there yet. They don't have the ability. So big tech climate strategists feeling the strain of AI power needs, they're still trying to go carbon zero by 2040. Now, these build-outs and all of the chips and all of this equipment they've brought forward is going to have to wait until they can get on the grid. They have said that they will prioritize this, but this means that they have to take it from homes. So HSBC executives saying China is uniquely strong on AI energy supply. This gives them a massive edge in this tech going forward because they can continue with it. Why? Because they're willing and they have massive amounts of coal. So they are willing to burn coal. It's a huge energy supply, although if some would say dirty, they're willing to do that in order to get forward. So with this, I want to talk about Argentina. $870 million boost. This swap, as Bessent called it, was a swap indeed, because the United States took the same amount of IMF assets. So in short, swap pulled it from the IMF and gave it to Argentina. Now we've done this several times throughout history, but it's all over resources and there's all over control. And if you don't believe me, look at the second one, Chevron, wanting Argentina tax reform because they are planning major oil growth. So they're one of the main corporations in that sector. Of course, if we see this forward, they're looking at huge profits to provide this kind of gap fill, if you will, because nuclear energy, while there's a lot planned, does take several years for the build out. We've got a little bit of a promise here, and what they're looking forward to is this might be the build out and why Oklo is becoming so popular. UK's first Rolls-Royce small nuclear reactor plant at Wilfa. to power 3 million homes. So they're also talking about these are small on-site reactors. I've spoken about these before, but they're now kind of ramping up and they could power these data centers. They still take time to build, so it's still going to be a scale-up issue. Now, shifting over to the digital currencies, on the blockchains that they will be running, Bybit has a security lab called Lazarus. They analyzed 166 different blockchains and found that 16 of them have the ability to freeze users' funds. So this is kind of what you're looking at forward, and you need to look at these sorts of things before you move any assets onto these blockchains. They can freeze your assets, usurp them for whatever reasons they want to fill in, but the ability is there. Just to let you know, when I shift over Taiwan, considering building a national reserve with seized Bitcoin, this is a direct page out of the playbook from the United States, who, by the way, has the largest amount of Bitcoin of any country, and all of it was seized. So, or at least that's what they say. So, seized Bitcoin becoming the reserves, it's just an interesting precedent to set, if you will. Now, strategy. Their Bitcoin dominance slipping in October as corporate treasuries expand. They don't mention BlackRock specifically, but BlackRock is one of the largest holders of Bitcoin as far as corporation, not government. So, US government, BlackRock, kind of interchangeable, and the two together are a behemoth. XRP, to shift to this one. Distribution phase does not change the $30 price target. This is because they control the supply through a pool. XRP is a little bit different. We've got a major shift coming up. 22nd of November is the target date, so look into this a little bit more. Tether, also fueling crypto's race toward global gold rush. Stablecoins are what is going to be used. They're kind of putting this forward as if they will be redeemable for the gold. Now, I want to be clear: redeemable for the assets they're stocking, the gold, or even if it's treasuries, is very different from saying it's going to be pegged to the price. They keep the assets and give you the tokens that they control the amount of. So, in short, this is just like using US dollar. It's not going to be any different. They can completely inflate the supply and control it from the top end. So with all of this, I want to make you aware because it looks like this is imminent. We are probably within months, if not within weeks, of this shift pattern holding over. So with this, wish you all a wonderful day. Good day trading if you are indeed trading. And until I see you again, resist.